Given Tesla's dominance in the sector and its high standards for innovation, the electric car market is at a crossroads. While some analysts believe the company will have a good future, others are still pessimistic. But with 2024 approaching, it's still unclear whether Tesla stock will rise to unprecedented levels or encounter difficulties going forward. Come along as we explore the facts, examine market patterns, and interpret the future of Tesla stock. Will it have increased by 100% by 2024? Will Tesla's lead over its competitors grow or contract? I believe the answers to these questions are known by those of us who consider Elon to be a real-life Tony Stark. However, be prepared to hear the truth and see the incredible opportunity to invest in the top electric car company in the world, but make sure to use the like and subscribe buttons before we head there. In 2024, it's conceivable that the price of Tesla stock may rise by 100%. While some analysts anticipate a reversal in Tesla's stock price by 2024, others are more pessimistic and think the stock will keep falling. Even though some have predicted a twofold increase, you shouldn't pass up this information while we still have the opportunity to gain from it. In 2023, the EV market will confront formidable obstacles in a number of crucial areas. We believe that there is still room for differentiation between Tesla and its competitors. Analysts surmise that the era of triple-digit growth and the notion of limitless demand that propelled Tesla's stock for so long may have come to an end. However, according to Adam Jonas of Morgan Stanley, analysts predict that in 2024, Tesla's earnings per share would soar, with sales expected to soar by 42% to $115.2 billion. Tesla continues to be the top-selling electric vehicle maker in the US as of early 2023. According to data released in November 2022, the majority of the 525,000 electric cars EVs registered in the US were Teslas. The original Fremont plant of global mobility has experienced a significant increase in production. Presently, the Model 3, Model Y, Model X SUVs, and the high-end Model S sedan are all produced at the Fremont facility. Tesla claims that up to 550,000 Model 3 and Model Y automobiles, as well as up to 100,000 Model S and Model X vehicles, can be produced yearly at the Fremont facility. There is a proposed capacity of 250,000 automobiles at the Austin facility. As the facility gets closer to full capacity, Tesla Austin is expected to increase profit margins by expanding the production of Model Y. Austin will be the manufacturer when the Cybertruck eventually reaches the market, which is expected to happen in the middle to late 2023. However, none of us anticipates the long-delayed vehicle to make a significant volume contribution starting in 2019. A late December story on Bloomberg's website states that Tesla is finishing up its plans to build an auto assembly plant in northeastern Mexico. Tesla has significantly increased its market share in the US in the electric vehicle market, though overall volumes are still quite low. The Ford Mustang, Hyundai Ioniq Q5, and Kia EV6 are intriguing crossover additions to the Model Y lineup. Several venerable automakers are gradually entering the EV space as well. Tennessee is now the home of Volkswagen ID.4 production. The competitively priced Fisker Ocean CV will go on sale by the end of 2023, when production of the Ford Mustang Mach-E is scheduled to start. By 2024, GM intends to provide a number of electric cars running on their new lithium batteries. By the fall of 2023, Ford intends to boost production of the all-electric F-150 Lightning pickup truck to 150,000 units annually. By November's conclusion, 13,258 F-150 Lightning trucks had been sold. The base price of Lightning has increased to about $56,000, a 40% increase from its original $39,000 as a result of multiple price increases. This huge rise is a reflection of Lightning's popularity as well as its high battery cost and scarcity. Even while mass EV production, particularly of Tesla's direct competitors, might not begin until 2024 or later, the race to attract American consumers to automobiles is anticipated to intensify overall. The lack of chips and other issues with the supply chain that have been driving down the cost of used automobiles, especially Tesla EVs, should, all things considered, cause U.S. auto manufacturing to increase in 2023. It's highly likely that Tesla will decide on a price that allows for tax returns from the IRS and reduces spending in the U.S. Because of the upcoming EV credits, many prospective Tesla owners have postponed making purchases or accepting delivery until 2023. This is so because only cars manufactured in North America are eligible for the EV credit. Imports are not included. Tesla is now giving customers who order Model 3 and Model Y vehicles in the US by the end of the year a $7,500 credit, up from $3,750 at the start of the month. In addition, the massive EV company is offering free supercharger miles as a bonus. The large electric vehicle company faced difficulties in the 2022 stock market, and as competitors improved, the pressure increased. Experts say that although Elon Musk, the CEO of Tesla, is a successful businessman, people's perception of him has drastically changed due to his recent poor decision-making abilities. Tesla stock has decreased by almost 62% after Musk announced his agreement to purchase Twitter in mid-April 2022. According to the Wall Street Journal, speculators who bet against Tesla shares in 2022 made a profit of $17 billion since he took over that business, following several years of exceptional achievement. Due to Musk's diversion with Twitter and the fall in technology markets that began in November 2021. Despite these improvements, some analysts contend that investors ought to focus on the bigger picture rather than the present difficulties facing Tesla. It's no secret that when inflation shot through the roof in 2022, investors lost it and put the stock market into bear territory due to rising interest rates and the potential for a U.S. recession. These investors may be able to profit from a stock market bottoming any time in the first half of 2023 and a solid year-end. A few trustworthy companies could see tremendous growth in the upcoming months. Of course, Tesla is one company that stands to benefit from the bull market. Although its shares fell by almost 67% over the last 12 months, consensus estimates indicate that it will rise by a similar amount in the upcoming year. The consensus of 36 analysts has set a price target of $250 for Tesla stock, which is 100% more than the current stock price of the electric vehicle company. This is in addition to a street high price estimate of $436, which could amount to a 286% gain from recent stock prices. Apart from the present state of affairs, it is noteworthy that Tesla has been seeing exceptional growth each quarter due to the robust demand for its vehicles. Despite the wider sell-off in the stock market, Elon Musk's takeover of Twitter as CEO and worries that the macroeconomic slowdown is reducing demand for Tesla vehicles. The shares of the corporation have suffered greatly as a result. China's cutbacks also affect the company's present price. The confidence of investors has been seriously damaged. By 2022, it is anticipated that Tesla will have grown its revenue by 53% to $82.5 billion and its profitability by 77%. Consistent growth of several dollars per share is anticipated for the company in 2023 and 2024. There are several explanations for why Tesla might see such staggering growth over the next 5 years, and the company's future appears promising all around. With an estimated 35% annual earnings growth, Tesla is a major competitor in the worldwide electric vehicle market. In Europe and China, respectively, the best-selling electric automobiles are the Tesla Model Y and Model 3. Two-thirds of all EV sales worldwide are made up of Tesla vehicle sales in the latter nation. Investors should remember that although growing competition from both new and established businesses is expected to reduce Tesla's market share in the future, the EV industry is one that is designed for long-term growth. By 2028, EV shipments are expected to have increased by 41% yearly, totaling 148 million units by the conclusion of the projection period. As it works to sustain its momentum in the face of escalating competition, Tesla's early advantage in this industry might prove beneficial. Tesla is well positioned to continue its rapid expansion with an installed annual car capacity of about 2 million units at the end of the third quarter and an increasing range of products. This year's good valuation, combined with Tesla's solid growth and possibly improving stock market, might enable this battered electric vehicle company's stock price rise in the new year and beyond. To receive double the information on Tesla stock, make sure you subscribe to this channel. Please hit the like and subscribe buttons if you enjoyed this video. I'll see you in the upcoming video too. Pro music.